Welcome back to XRP Update. Today we're going to discuss something that goes far beyond charts, candlesticks, and short-term price predictions. Every single day, millions of investors open their crypto apps, check the price of XRP, and immediately decide whether they should feel excited or disappointed. If the price moves a few percent higher, social media is filled with celebrations. If the market drops, fear spreads across the community, and many begin questioning whether they made the right decision. But what if the biggest story surrounding XRP has nothing to do with today's price? What if the real opportunity isn't measured by a daily candle or a weekly chart, but by a transformation that could take years to unfold? That is exactly the perspective we're exploring today. Many people see XRP as simply another cryptocurrency competing with thousands of digital assets. Others, however, believe they are witnessing the construction of an entirely new financial infrastructure. According to this viewpoint, the current market is merely the early stage of something much bigger, and history may eventually look back on this period the same way we now look back at the birth of the railroad industry, the oil industry, or the internet revolution. Think about history for a moment. Every generation experiences technological shifts that completely redefine the economy. There was a time when railroads changed transportation forever. Later, oil transformed industries around the world. Then came electricity, automobiles, computers, and eventually the internet. During each of these revolutions, the majority of people either ignored the opportunity or failed to understand its significance until years later. Meanwhile, a relatively small group of individuals recognized the potential early and positioned themselves accordingly. Today, some XRP supporters believe blockchain technology represents another one of those historic shifts. Whether that belief ultimately proves correct is something only time can answer. But understanding this mindset helps explain why many long-term holders remain committed despite years of volatility. One of the arguments frequently discussed involves XRP ownership itself. According to the information presented, only a very limited number of accounts hold extremely large amounts of XRP. Supporters interpret this as evidence that if XRP eventually becomes part of global financial infrastructure, those positioned early could potentially benefit from enormous value creation. Now, this isn't presented simply as a price prediction. Instead, it's a comparison to previous periods in history where technological revolutions created entirely new classes of wealthy individuals. Consider some of the most famous names in American business history: Rockefeller, Carnegie, Vanderbilt, J.P. Morgan, and Henry Ford. Today, these names symbolize extraordinary success and immense wealth. But when they were building their businesses, history had not yet declared them legends. At the time, they faced uncertainty, criticism, competition, and financial crises just like every entrepreneur before them. People living during those years didn't know they were witnessing the birth of industrial empires. Only later did history connect the dots. This is why some XRP supporters argue that standing in today's market may feel ordinary, but future generations could potentially view this period very differently if blockchain technology becomes deeply integrated into the global financial system. Of course, skepticism exists, and skepticism is healthy. Every emerging technology attracts believers and critics alike. However, the discussion emphasizes that understanding long-term vision requires studying history rather than reacting emotionally to daily price movements. One historical example often referenced is the financial panic of 1873. This economic crisis caused widespread business failures, collapsing markets, and enormous uncertainty. Railroads suffered significant losses, companies went bankrupt, and investors experienced severe fear. For ordinary people living through that period, the future appeared disastrous. But history tells another story. Some of the industrialists who would later become legendary viewed the crisis differently. Instead of running away from opportunity, they saw discounted assets. Instead of focusing on today's panic, they focused on tomorrow's possibilities. Businesses that others considered failures became acquisitions. Assets that others abandoned became foundations for future empires. This way of thinking represents one of the biggest differences between short-term traders and long-term builders. Most people ask, why is the market falling today? Long-term investors often ask, what opportunity is this creating for the future? This mindset is then connected to Ripple's own journey. Over the years, Ripple has faced regulatory uncertainty, legal battles, criticism from competitors, and constant public debate. Headlines frequently focused on lawsuits or market disappointment rather than technological development. Yet according to supporters, Ripple continued building. Partnerships continued. Infrastructure development continued. Expansion efforts continued. Instead of allowing market sentiment to dictate long-term strategy, the company appeared focused on pursuing broader objectives regardless of temporary volatility. This distinction is important because markets are emotional. Technology development usually is not. Innovation often continues quietly while headlines focus elsewhere. Many investors measure success week by week. Businesses building infrastructure often measure success year by year. That difference in time horizon can completely change how events are interpreted. Another fascinating aspect of this discussion is psychology. Human beings naturally seek comfort in following the crowd. When everyone is optimistic, confidence feels easy. When everyone is fearful, doubt spreads rapidly. History repeatedly demonstrates that financial markets often exaggerate both emotions. During periods of excitement, many investors believe prices can only continue rising. During periods of fear, many believe recovery is impossible. Ironically, some experienced investors have spent decades doing exactly the opposite. They become cautious when optimism reaches extreme levels and begin searching for opportunities when pessimism dominates the conversation. For them, market sentiment itself becomes valuable information. And perhaps that explains why many long-term XRP holders continue accumulating during periods when enthusiasm across the broader market appears limited. Because from their perspective, today's frustration could become tomorrow's opportunity. One of the biggest misconceptions in financial markets is the belief that wealth is created overnight. Whenever someone becomes successful, people often ignore the years of preparation and only notice the final result. They see the destination but never the journey. If XRP were to experience significant appreciation in the future, many outsiders would probably say, "You just got lucky," or "You became rich overnight." But long-term holders would likely tell a completely different story. They would talk about the years spent waiting while the market moved sideways. They would remember the endless criticism from people who dismissed XRP. They would remember the fear during market corrections, the uncertainty surrounding regulations, and the constant headlines predicting failure. From their perspective, there would be nothing overnight about the journey. Instead, it would represent patience, conviction, and the willingness to stay invested when many others lost confidence. This brings us to another important point discussed in the transcript: the difference between speculation and infrastructure. For years, much of the cryptocurrency industry has been driven by excitement. New projects appeared almost every day. Many promised revolutionary technology, incredible returns, or the next big innovation. Social media became filled with hype, meme coins, and speculative narratives. Supporters argue that while much of the attention was focused on these short-term trends, another story was quietly unfolding in the background. Instead of chasing headlines, Ripple continued working on financial infrastructure. Now think about traditional finance. Banks do not rebuild their systems every few months. Governments do not redesign payment networks overnight. Global financial infrastructure develops slowly because it must be secure, compliant, and reliable. Every improvement requires coordination among regulators, institutions, technology providers, and market participants. This means that genuine transformation is usually measured in years rather than weeks. That is exactly why many XRP supporters say they evaluate progress differently from short-term traders. They are less interested in asking where XRP might trade tomorrow, and more interested in asking where blockchain technology could fit into the global financial system 5 or 10 years from now. The discussion then shifts toward one of the fastest-growing topics in modern finance: tokenization. Although the term sounds technical, the concept is relatively straightforward. Imagine traditional financial assets such as government bonds, investment funds, stocks, or even real estate existing on blockchain networks instead of relying entirely on conventional systems. Supporters believe this could dramatically improve efficiency, transparency, and settlement speed. According to the discussion, the tokenization sector has already expanded significantly over the past few years, growing from almost nothing into tens of billions of dollars. Even more interesting are projections suggesting that tokenized assets could eventually reach trillions of dollars. Of course, projections are not guarantees. No one can accurately predict the future with certainty. However, forecasts of that scale demonstrate that major financial institutions are actively studying this technology rather than dismissing it. And this is where many XRP supporters connect the dots. Their thesis is not simply that cryptocurrency prices will rise. Their thesis is that financial infrastructure itself is changing. If trillions of dollars of real-world assets eventually move onto blockchain networks, then the systems responsible for facilitating those transactions could become increasingly valuable. Utility, from this perspective, becomes more important than speculation. For years, crypto discussions often centered around hype, the next meme coin, the next trend, the next social media narrative. But institutions generally evaluate technology differently. They ask practical questions. Can this system operate securely? Can it settle transactions efficiently? Can it comply with regulations? Can it integrate into existing financial infrastructure? Supporters argue that these are precisely the types of questions Ripple has been trying to answer. The discussion also references developments involving the XRP ledger and tokenized financial products. Rather than focusing solely on rankings or competition, supporters interpret these developments as signs that institutional interest in blockchain infrastructure continues to grow. Whether these developments ultimately lead to widespread adoption remains uncertain. However, they reinforce the belief that blockchain technology is gradually moving beyond speculation toward practical financial applications. Another fascinating point concerns market psychology. Many investors become discouraged after extended periods of disappointing performance. As months pass without dramatic price increases, enthusiasm declines. Social media conversations become negative. Confidence weakens. People begin questioning their decisions. Ironically, experienced investors often describe these moments as the periods that require the greatest discipline. History demonstrates that emotional decision-making frequently produces poor investment outcomes. Buying because everyone else is buying and selling because everyone else is selling may feel comfortable, but comfort does not necessarily produce success. The transcript highlights the idea of capitulation. Capitulation occurs when investors finally give up after prolonged frustration. They stop believing. They sell their positions. They decide the opportunity no longer exists. Interestingly, many experienced market participants monitor capitulation closely because it sometimes signals that maximum pessimism has been reached. Again, this guarantees nothing. Markets remain unpredictable, but understanding investor psychology helps explain why some participants think differently from the crowd. Instead of asking whether everyone else is optimistic, they ask whether everyone else has already become too pessimistic. This difference in perspective separates emotional reactions from strategic thinking. And according to many long-term XRP supporters, strategic thinking requires looking beyond today's headlines toward tomorrow's infrastructure. They believe the financial world is gradually changing in ways that may not yet be obvious to the average observer. The biggest transformations rarely announce themselves with certainty. Instead, they develop quietly while public attention remains focused elsewhere. That possibility, they argue, is exactly why patience continues to be one of the most valuable qualities an investor can possess. And perhaps the most important lesson from today's discussion is this: history rarely rewards those who only follow the crowd. Every major technological revolution has gone through a period where the majority of people doubted its future. When automobiles first appeared, many believed horses would always dominate transportation. When the internet emerged, countless experts questioned whether it would ever become part of everyday life. Yet today, both have completely transformed the world. Supporters of XRP believe blockchain technology may be following a similar path. They argue that the market is still focused on short-term price action, while the real development is happening behind the scenes. Institutions are exploring tokenization, companies are investing in blockchain infrastructure, and conversations around digital finance continue to expand across the world. From this perspective, the question is no longer whether blockchain technology will have a role in the future, but rather which networks and platforms will become the foundation of that future. That is why many long-term holders continue to watch developments with patience, instead of reacting emotionally to every market swing. Another important takeaway is that wealth creation and wealth preservation are two completely different challenges. Building an investment portfolio requires conviction, but protecting it requires planning, discipline, and security. As digital assets become more valuable, responsible investors must think beyond profits and consider how to safeguard their holdings for the long term. At the same time, it's essential to remain realistic. No one can predict the future with absolute certainty. Markets are influenced by regulations, global economics, technological progress, and investor sentiment. Every investment carries risk, and no projection should ever be treated as a guarantee. The ideas discussed today represent a long-term perspective shared by many within the XRP community, but every individual should conduct independent research and make decisions based on their own financial goals and risk tolerance. What is undeniable, however, is that the financial world is changing. Artificial intelligence, blockchain technology, digital payments, tokenized assets, and new forms of financial infrastructure are becoming increasingly important topics across the globe. Whether XRP ultimately becomes a central part of that transformation is something that only time will reveal. For now, many supporters believe they are not simply holding a digital asset. They believe they are witnessing the early stages of a financial evolution that could reshape how value moves around the world. And if history teaches us anything, it is that the biggest transformations often look ordinary while they are happening, and extraordinary only when we look back years later. That's all for today's analysis. Remember, this video is intended for educational and informational purposes only, and should not be considered financial or investment advice. Always do your own research before making any investment decisions. If you enjoyed this deep dive and want more high-quality analysis on XRP, blockchain adoption, institutional developments, and the future of digital finance, make sure to subscribe to XRP Update. Turn on notifications so you never miss an update, and share this video with anyone who wants to stay ahead of the biggest trends shaping the future of finance. Thank you for watching, and I'll see you in the next XRP Update.